just trying to multitask and letting a few more people. Okay, so before we get started, cameras will be off, microphones will be off. We will record this session, and this session will be available for playback. So if you do find it interesting, any of your colleagues have actually missed today's session, it will be available on TMA Vision, which can be found on our website. If you go to tmaclub.com and you click on the events page, you will then see under TMA Vision a load of pre-recorded content webinars from many of our providers going back quite some time. We will look to have questions today over potentially over the course of the sessions, but the bulk of the questions will be picked up at the Q&A at the end of today's presentations via our providers. Thanks very much. If you did have any questions, please do pop them into the chat and we can pick them up. Thank you. If you do have any tech problems, any issues at all, please do reach out to my broker support team. The wonderful team are always on hand to pick up any Q&As, any stuck cases, any problems. We've got access to lender grids, etc., and provider grids. So do feel free to give them a phone call with any sticky problems or any tech issues that you might have today. And if you are and do want a CPD, of course, vital to go towards your CPD log, then these will be sent out to you via the email address that you registered after the event. So thanks very much. Okay, so the agenda. So our special guests today are going to be John Revel from Underwrite Me, and John will shortly be sharing some underwriting insights and some specific disclosures and taking us through some case studies on the impact of those disclosures, and then moving on to the topical area, certainly topical at the moment, an area around about weight loss and the medical jabs that are obviously out there, and then some discussions and slides around nicotine replacement products. So some very, very topical, very important, very relevant information that's going to be covered on that session. I believe John's also got a demo that he's going to be taking us through as well. So thanks very much, John, for that. Looking forward to it. Should be really, really good. We'll then next up have Janine Byrne from L&G. And Janine's going to be sharing with us some USPs, some handy hints around their proposition, and then some improvements around such areas as children's critical illness cover, some indexation, and some quote validity improvements that I'm sure will be very much well received. And then to wrap things up, the third and final session is going to be given to us by Roy Pinney, our area compliance and supervision manager. And Roy's session is entitled Compliance Corner. And he's going to be sort of really digging deeper into what the regulators are looking into, certainly this year, and their key sort of areas of focus. So yeah, really, really, again, worthwhile hanging around to really understand the headwinds and what's being looked into in greater detail. So without much further ado, we'll then obviously pick up the big sort of final Q&A. But without much further ado, I'm now going to pass over to John Revel, who's from Underwrite Me, who's going to be covering his session. Thank you. John, I'm going to allow you to share the screen and you can take over from me. Thank you.
Brilliant. Thank you, Tim. Just share my screen. So yes, morning everyone. Thanks very much for inviting me here today. It's great to be with you all. My name is John Revel. I'm Sales Development Manager at Underwrite Me. And today's session we're going to be looking at busting the underwriting myths and why you shouldn't necessarily fear the process of that underwriting piece when you're looking at life cover and critical illness. So the agenda that I want to go through in the next 30 minutes, we're going to explore how, I suppose, underwriting is evolving and how we can use insights and technology to deliver those good outcomes that we want to give to. First, we're going to delve into a couple of specific disclosures, and many people wonder how common disclosures are, medical or lifestyle, and the truth is the more common and becoming more prevalent than ever before. So we'll look at some insights and see how and what we see coming through the protection platform there. The next couple of parts, as Tim alluded to a little bit earlier, are quite topical areas. So we've got weight loss medication and nicotine replacement products, and how that how we see that on the protection platform, and how we see that in general as well. So there's some insights and some stats that we can go through there. And then finally, we're going to look at how technology is transforming underwriting, and specifically, I'm going to run a quick demo of the protection platform that we've got at Underwrite Me. Not to add any more jeopardy into a webinar, but I'm going to use slides and then I'm going to go into a live demo. So hopefully, fingers crossed, the technology will work. So before I go into the main session, I just quickly wanted to give you a little bit of background to who Underwrite Me are, for those of you who aren't aware of who we are. So Underwrite Me are a global leader in underwriting technology, and we have two main parts to our business. The first part is our decision platform, and that effectively powers underwriting systems for insurers. And that's not just in the UK, but it's also globally as well. So we're across 12 countries when it comes to the decision platform. The second part is the area that I'm going to concentrate on today. That's going to be, for you to understand a little bit better, is the protection platform. And the protection platform is a unique product sourcing and application tool. And it's very important that you remember it's not just a sourcing tool, it is a full application tool as well. I'll go into the details of that in a bit. But this effectively gives advisors access to real-time underwritten prices, not just from one insurer, but across multiple insurers. And as you can see there in terms of the slide, to date, we've seen over 2 million products activated, submitted through the protection platform, and that's across a number of distribution partners, up to about 1,500 distribution partners. And then finally on this slide, just to give you some peace of mind in terms of our ownership, we're owned by a reinsurer. We're owned by Pacific Life Reinsurance, and they are one of the leading reinsurers in the market. And I suppose this gives us the security to not only develop the products to where we've got to at the moment, but also it will allow us and give us the security to develop those products even further. As we know, technology is moving at quite a rapid rate, and we're looking at a number of things at the moment, not just on the decision platform, but also on the protection platform as well. So as I've already alluded to, before I just go into the common disclosures, this is worth just giving some context in terms of what the protection platform is and what it does for those of you who aren't aware. As I said, it's a multi-insurer system that's been developed, I suppose, to remove the complexity from the application process. So such as, complexity where you've got to access multiple platforms, speaking to individual insurers when it's a pre-sales inquiry, and trying to keep up to date with the constantly changing underwriting rules. We know that some insurers can make upwards of 500 rule changes in a year. So it's really difficult to keep track of this, especially when it's across all the insurers that you have access to. But systems like the protection platform can support you with these updates, because we give you access to real-time immediate underwritten prices and terms when you answer a question on our application form. It gives you the ability to put policies on risk immediately. As I said before, it's not just a product sourcing tool, it is also an application tool. So you can put policies on risk through the platform without leaving the system. You don't have to go into an insurer extranet to put policy on risk. We have a single question set for all the insurers, and where appropriate, it allows you then, therefore, to split products across multiple insurers just by answering that one set of questions. And I'll show you an example of that in the demo. And then finally, it's a really good safety net. So when you maybe get forgetful clients, it also gives you access to those real-time immediate underwritten prices from multiple insurers. So let's move on and have a quick look at some common disclosures. Now, before I go into the couple of specific disclosures I wanted to go through today, I just wanted to point this out, because when we look at all the health disclosures people make on applications coming through the protection platform, there's actually a huge 91% that actually come from just 20 conditions. So rather than being spread across hundreds of different medical issues, the majorities we can see here that we see coming through the platform are concentrated in a fairly small set of conditions. And these aren't obscure or unusual conditions. They're the sort of conditions that we see on a regular basis. So things like BMI, asthma, family history of certain illnesses, depression, high blood pressure. These are the sort of everyday disclosures that most of us could probably predict. But when we look at the data, it's really interesting to see that actually 91% of these application disclosures are coming from this type of these type of conditions. So let's move on now to have a look at a couple of common conditions that we see coming through, and I'll give you some insights into what we see. So we're going to go through high blood pressure and we're going to go through mental health. So here we're going to look at high blood pressure for life cover. And again, all these figures that you see on the screen at the moment, these are taken from applications coming through the protection platform where multiple insurers will return decisions. So the first thing to point out is that in the vast majority of cases, there'll be an immediate decision. We can see that over 92% will get what we call a buy now or straight through acceptance. Will get a decision on the platform. And actually, a really high percentage will get standard rates as well from at least one of the insurers that we have on the platform. We can see that percentage on the right-hand side. Over 80% will get 80%. Over 80% will get standard rates. Sorry. Now the clients are likely to know when they were diagnosed for a condition like high blood pressure, if they take medication, and what the latest blood pressure readings were, and all of this sort of information is obviously going to be really important to make sure that you understand, so you can put this into a system like protection platform that's going to give you these decisions. And we are seeing, 10% of applications, so 1 in 10 applications are coming through the protection platform with this disclosure. So it's really good to know that your client can get cover straight away. And in the vast majority of cases, there's not going to be an increase in premium, as we can see there on that 80% stat there. If we move on to have a look at the second common disclosure I wanted to go through today, I wanted to look at mental health. So over the last 6 months, we've seen just over 20% of all applications submitted through the protection platform included a mental health disclosure, which is actually a really, really quite high percentage to see coming through. And I suppose what this tells us is that mental health isn't a fringe issue; it's a mainstream reality, and it's something that I suppose we've got to be ready to address in the protection space and in the industry. And I suppose the challenge for us as an industry is, how do we make sure that just because someone discloses something like a mental health condition, we don't just automatically think that cover won't be possible. So if we look at, again, the information that we see coming through on the protection platform, um, specific disclosures coming through, almost 1 in 5 applications, so that's 18.8% there on the left-hand side, disclose anxiety, stress, and depression, or depression, I should say, when they apply. Now, these are the 3 most common disclosures in this area of mental health. But on the right-hand side, we can see that for life cover, over 99% of applications are going to get a buy now decision. So again, that's coming from at least one of the insurers that we have on the protection platform. Over 99% of these people that are disclosing anxiety, stress, or depression are going to get a buy now decision. So it's clear that mental health, I suppose, isn't a side issue. It's something that advisors are seeing coming up regularly, and we're seeing coming up regularly on applications through the platform. However, we can see here that cover is possible. So hopefully that gives you some positivity in terms of just because someone has a disclosure like this doesn't mean that we're not going to be able to get cover for those clients. So they're the 2 specific conditions I wanted to go through today. I want to just quickly touch now on some topical areas we're seeing coming through on the platform. And the first area is weight loss treatments, which is in the news on a regular basis. According to the BBC, they did a study last year. According to the BBC, 1.5 million people in the UK are already taking some form of weight loss treatment. Now, that was done last year. I'm gonna assume that's probably going to have increased in the space of 6 to 9 months when they did the study last time. So that's a big number. probably more importantly, if we look at that stat in the bottom right-hand corner, 90%, so it's 9 out of 10 people of these people that were surveyed are paying privately. And again, that's according to the BBC. And that means only a small fraction are actually getting their treatment prescribed through a GP. Now, that matters because when it comes to insurance and insurers assessing the risk, they're exercising caution when treatments are sourced elsewhere. So, for example, through online pharmacies, some people are buying these types of medication on social media or beauty clinics. And these types of routes obviously bring great uncertainty. So that's where an insurer is looking for the risk. So things like the quality, things like the monitoring and the side effects and medical oversight when being bought through those types of channels like social media or beauty clinics, it's just not there. In terms of what we see on the Protection platform, over the last 6 months, we've seen just short of 1,500 disclosures for weight loss. Again, that's coming through the Protection platform. And this has actually increased, it's actually a third more than what we saw coming through 12 months ago. So it is on the increase in terms of those disclosures. And I suppose it's a real clear sign of how health and lifestyle factors and new treatments are increasingly part of the conversation when people apply. And it's something that, uh, as an industry, we need to be aware of. And for that reason, we've put together a specific set of questions when it comes to weight loss medication. Now, we put these questions into the platform November last year. Um, and, it's, as I said before, in terms of where people are getting their medication from, it's really important to understand and it's really important to capture the detailed information. So things like where the treatment is sourced, was it a GP, was it a pharmacy, or something less regulated? How much weight has been lost and over what time period? Have there been any complications? So there's a number of different known complications that can be associated all the way, some quite minor stuff, all the way up to something like pancreatitis can be a complication or side effect. And is this treatment still ongoing? Now, when treatment is prescribed through a GP and there are no red flags like complications or a very recent start date, buy now decisions are still possible, but ultimately it's up to the insurers how they decide how to treat something like weight loss medication. But again, I suppose what's clear is that it's fast becoming far more common, as we've seen in terms of the numbers that we've seen in the last 6 months compared to 12 months ago. And as an industry, I suppose we all need to adapt to that evolving landscape by gathering the required information, the rich disclosures, and distinguishing between that low and high risk scenario. Moving on to the second area, I just quickly wanted to touch on today. I wanted to look at something like nicotine replacement products. And we're going to specifically look at vaping for the next couple of slides. So just to give you some background, according to ASH, we can see the number here on the left-hand side. From 2012 to 2025, vaping prevalence rose from 1.7% to just over 10%. That's 5.5 million people are vaping. Now, 2.7 million people who quit in the last 5 years used a vape to do so. And out of those, 64% are still vaping. So it's about 1.7 million are still vaping. And then probably the most alarming stat is approximately 1 million adults in England have started vaping despite never having regularly smoked cigarettes. And that's according to a 2024 study by University College London and the Lancet. So this is something that is on the increase. There's more and more people are vaping at the moment, and there's still it's an area that we're still finding out more and more about the effects of vaping. In terms of what we see coming through on the Protecting platform, this is a really interesting trend that we're seeing coming through. So out of all the applications coming through on the Protecting platform in the last 6 months, nearly 2,500 customers initially said they were non-smokers, but then later in the process, they went on to declare that they actually vaped, used e-cigarettes, or used some sort of nicotine replacement product. And I'll show you that question when I go through the demo in a minute. And this does cause an issue. as obviously the rates are going to move from a non-smoker rate to a smoker rate. And if you're on one insurer journey, obviously those rates are going to change. You're not going to know what the rest of the market are going to offer in terms of those rates. But I suppose what this highlights, what this stat highlights, is how people perceive themselves to be a smoker or not isn't always straightforward, especially with the prevalence of things like vaping or tobacco pouches. They might not see themselves as a smoker, but vaping and those alternatives are now big parts of the disclosure landscape, and I suppose it's up to us to make sure that people are aware and it's obvious that if they do vape, then we will class them as a smoker for the purposes of insurance. So they're the set of slides I wanted to go through today. I've now got about 13, 14 minutes to give you a quick demo of the system. So if you bear with me, I will switch screens. Hopefully you can now see my web browser.
Yeah, we can.
Yeah, brilliant. Thanks, Tim. So I'm going to go and show you a quick demo of the protection platform. So this is the first screen that you would see when you go in. This is giving you a bit of information about the applications you created and the applications you've submitted. I'm not going to spend too long on this page. I'm going to go straight into an application that I've already started. So I'm going to click on this application here. I'm going to go into the protection platform. So what I've done is I've already set up this client. I've already put some basic information in. We can see here I've put the name, address, date of birth, if they're a smoker or a non-smoker, and I'll come back to this area in a minute. And I've kept it as a single life. And we can see on this left-hand side, the products that I'm looking at are life and critical illness and life cover. Now on the protection platform, you can do family income benefit, you can do critical illness on its own, you can do income protection. So all the personal protection products are available on the system. So I put that information in, I've put the client's address in, and what we can go to now is the estimated prices. So at the moment, I'm not going to show you anything that's groundbreaking, nothing that's different in terms of a traditional quote portal. All you're going to see are those indicative standard rate prices that you see coming through those standard quote portals that you'll use. And you can see the insurers there returning those decisions. Now, where the platform completely differs from those quote portals is this next section. So I've now gone into the question set. You can see all the different question areas there down the left-hand side. This is the first page. And as I said before at the start of the presentation, the protection platform will give you live underwritten prices from multiple insurers. So the easiest and quickest way to show you that is by putting some height and weight in for this person. So this is a female client, 5'7" and 14.5 stone. I'll click on the estimated prices, and whilst we're calling it estimated prices, we're doing that because we haven't completed all the questions on the application form. So these are live real-time prices that are coming through. And as we can see, the initial price that we saw earlier is £53.69, has now been crossed out, and the new price, £67.78, is showing underneath, and that's the same for all the insurers you can see there. And if we wanted to double check to make sure we understood why that was occurring, we just open up the details section and we can see because this person's bill disclosure, it's had an impact on the premium. So the person's BMI has had an impact on the premium. So that's a very, very simple, straightforward way of showing you the power of the platform. Again, these are real-time live prices that are coming through from the insurers. We effectively feed into their rules engines, and as soon as you answer a question, you're going to get a live decision straight back. The next example I quickly wanted to show you was around the smoking status. So I mentioned before that on the initial page, we've made this person a non-smoker. And obviously part of the presentation today was around how people perceive themselves to be a smoker or not. And you can see here the expanded smoking question here. So we've got I've vaped, used e-cigarettes or other nicotine replacement products in the last year. So if someone clicked on that now, that would put them in the category of a smoker status. So if I click on that, click on estimated prices, and we should see some changes. Now, what this does show is, I suppose, that something can quickly change on an application that does affect the price, does affect which insurer that might be best for your client. something as simple as a smoker status change can have that impact. And as we can see, the initial price has gone up, so it's gone up to £89 because we're not looking at ratings here. We're looking at a premium set, so we're looking at a smoker premium set, and we're going to carry across the rating for the BMI. Again, if we open up this details section, it'll give us further information. So we've got the rating for the BMI, and then we've got here, because of that particular disclosure, Vitality can't offer non-smoker rates for this particular person. So you can see how quickly we've got to those decisions. And obviously, we're not just returning one insurer's decisions, we're returning multiple insurers. Now, I'm very conscious of time, so I'll quickly show you one more example of the functionality of the platform, something a little bit more complicated. So I'm going to look at family history of breast cancer. You can, before I click on that, you can go to any question in any order. So again, using it as a pre-sales tool, you don't have to answer all the questions to get to those decisions. You can pick and choose which questions are pertinent to your client and use it as a pre-sales tool as well as a full application tool. So this person's got a disclosure of family history of breast cancer. I click on that on the left-hand side, and then I go through the reflexive questions for this particular question set. I say that this person had a mother who was 49 when they were diagnosed, and answer that there. So we've answered all the reflexive questions now for that particular question set. Again, if I go into the estimated prices again now, we should see some further changes. We'll see those coming through in a minute. And we can see now that LV are now at the top in terms of the price. And there's been some changes in pricing there. But we're not just looking at price here, we're going to look at the terms that are being offered by each insurer. So whilst LV are the cheapest, they're actually going to exclude breast cancer in this particular scenario. If we have a look at Royal London, they're going to do the same. They're going to exclude, but again, it's a cheaper price. If we have a look at Vitality, however, they're actually going to rate on that disclosure of family history. So what this allows you to do is manage clients' expectations and have that full and frank conversation with them. You can say, okay, you can get cheaper cover, but you're not going to be covered for this. You can spend a little bit more and you're going to have full coverage. So we've got, again, to this decision pretty quickly, and this allows you now to have that full and frank conversation with the client with all the information in front of you. Just to finish up on the demo, I mentioned before about being able to split products between multiple insurers. You can do that quite simply, so you don't have to submit an application to Royal London or an application to LV. You can do that through just answering one set of questions by simply clicking on Add to Basket for LV. And then if we click on the live cover, we can say where we want to go with the extra for the live cover. I've now just been able to split those products with those two insurers. If I complete all the questions, I can literally put those two policies on risk with those two insurers today through the platform. So I think that's my time up. I'll stop there. I don't know, Tim, if we just move on to Janine at L&G for her session, or if there's any questions that you feel pertinent to ask at this point.
Yeah, perfect. Look, thanks very much, John. As someone myself who's a bit of a visual learner, I appreciate the demo on that one. So that's really, really good. Some interesting stats there, certainly for me. I didn't realize 91% of app disclosure just come from 20 conditions. So really, really sort of interesting number there. And I also didn't realize that 21% of apps contain mental health disclosure in the last 6 months is something that's very, very poignant. So really, really good. And I suppose for me, I did just have one quick question myself. And that was around those weight loss jabs. I think we all sort of know someone who's on a weight loss jab or so. And I remember, obviously, you said that if it's prescribed via a GP, obviously you've got the buy now rates. But do you know what sort of success there is for people who are doing them privately? What sort of hazards or implications or problems you're seeing on that front? What's the success rate for those who are doing it privately? Are they still able to take out insurance? What's the general sort of consensus of thoughts?
It's far more difficult, and obviously the insurers are assessing that area all the time. And I think over time it might improve, but ultimately, what we've got on the platform is we're the conduit between the advisor and the client and the insurer. So it's entirely up to the insurer in terms of the rules that they put in place. But there's certainly more risks that come about where this type of medication isn't being sourced from the appropriate GP, and people are fabricating a little bit of information in order to get the weight loss medication, and no checks are being then put in place, which obviously carries risks, which is what the insurers
Yeah.
are. So there is less chance of those policies getting terms, or those applications getting terms because of that reason. Yeah.
Okay, perfect. Thank you. There is one question which I will just field now. One has been posted in the chat from Michael, and he was just asking, good morning. Does your platform replace platforms such as iPipeline's Assure Web or Solution Builder? Do you just want to answer that
Yeah.
one, John?
I'll give you a completely honest answer at the moment. So we haven't got every single insurer on the platform at the moment. And whilst we haven't got every single insurer on the platform, I would say you will still need to do your initial sourcing through an iPipeline or an Iris, which will give you that full indicative standard rate research. Obviously, where the client has a medical disclosure, you can then jump into the protection platform, quickly see which insurer will be best placed for your client. And then obviously, if it's an insurer on the platform that's giving you the best terms, you then complete the application on the platform. But I would say for the time being, if I'm completely honest, you should still be using Iris or iPipeline as your initial premium research, and then using the platform for the underwriting piece of work.
Lovely. Perfect. Okay. For the reasons and for time, if you have got any questions, please do post them in the chat and we will pick them up after our next session. But appreciate you picking up that quick one. I'm now going to move forward. Thanks very much, and hand over to Janine at L&G. Janine's going to share her screens and give us an update on all things of an L&G flavour. If you do have questions, as I said, please do continue to post them. We will pick them up towards the end of the session. Thank you. Janine, over to you. Thanks very much for coming
Can
along.
I just check you can see my screen?
Certainly can, yes.
Yeah, fantastic. Thanks. Thanks, John, and thanks, Tim. John, that was a really interesting session. Thank you. It actually leads quite nicely into some of the stuff we're going to be talking about, because as you mentioned, not everybody is on the platform, and we've made some key changes to our proposition, specifically relating to underwriting, which I will go through with you at the end of this session. But there is more to it than just the underwriting side of it. What I want to do today is talk you through some really exciting changes that we've made to our proposition over the last 12 months. Every single change that we've made, it's all been designed with this thought that we need to keep up with life's changes, because if there's one thing that we know, it's that life does not stand still. Clients' incomes change, circumstances change. We know the mortgage market is changing, monthly, weekly, and costs are rising. So we need to make sure that we are providing cover for your clients that stays in line with that, and that stays, keeps pace with it. So we've reviewed a few areas of our proposition, and every single change that we've made is with you or the client in mind, to make sure that you're able to provide good quality cover that has a seamless process. So as I mentioned, we've made a number of changes. I'm going to go through 5 of the changes that we made last year. As I said, every single one of them is an improvement. There's no catches, there's no trade-offs, just positive changes that are designed to improve your experiences. So the first one that I wanted to remind you of, if you don't already know, is that we made a change to our critical illness extra. We made quite a few changes to critical illness extra in the number of conditions that are covered, the definitions behind those. But one of them that we've made that is really significant, especially for people with lower sums assured, is the change to the additional payouts that we make. So these are for conditions which are less serious. So, for example, some less advanced cancers or early stage conditions, which still have a massive impact on people and their finances, and cause them to take time off work and maybe make changes to the home, but aren't seen necessarily as critical. what we'll do is we will give a partial payout, if you like. We call them additional payments of their sum assured. Now, previously, what we'd do is we would pay the lower of 50% of the sum assured or 35,000 at the lower of those two. What we've done is we've improved that. So we'll pay 100%, the lower of these, so the lower of 100% of the sum assured or 35,000. So the cap remains the same, but what has improved is that percentage calculation. And as I said, that can make a significant difference, especially with lower sums assured. So if you look at this chart, this table, if a client had £40,000 worth of cover previously, the additional payment would have been capped at the lower of 50% of 40,000, which is 20,000, or 35,000. So they would have received 20,000, but under the new rules, they'll get 35,000, their full amount, because we've taken away that 50% cap. So now they'd receive 35,000, which is a 15% increase, which is a meaningful amount of money at what can be a really difficult time for people. So any client with a sum assured lower than 70,000, this enhancement can make a massive difference to what they get. And it also makes your life a little bit easier when explaining it as well. It's simpler to explain that it is up to 35,000 and you don't have to explain the 50%, etc. What you'll also have found over the past year is these changes that we've made around critical illness extra has really strengthened our position on tools like CI Expert, because of these things that sit behind it. So it's not, when you see that improvement on these third-party tools, yes, it is relating to the fact that we've improved our definitions and added more conditions, but it's also some of these things that sit behind it as well that has impacted it. Another change that we made to critical illness extra was on the children's cover specifically, and it's similar to what we did on the adults cover, in that we've removed that 50% and just put it at 100% of the adult sum assured up to 40,000. And we know that when it comes to children's critical illness, it's a benefit that it has an enormous impact on the relieving of stress when families are going through something so awful. It's often the most horrific time emotionally, but there is a huge financial impact too. There's a lot of travel costs sometimes, taking the kids to and from hospitals, parking costs, the working hours of the parent a lot of the time reduce or stop completely. So this enhancement is a really important one, and we wanted to make sure that our clients were getting as much of the cover as possible. Again, it makes your life easier as well, explaining this to clients. And with parents that have lower sums assured, again, this is where it's going to have that real impact. So as you can see on this table here, if somebody had £40,000 of cover previously, they would have got 50% or up to 40,000, so the lower of the two. So previously they would have got 20,000, but now it's double that, so they would get that full 40,000. So as I said, this is going to make a massive difference to people at the hardest point in their lives, and it might allow somebody to take time off work completely or temporarily. And also, what we find a lot when we see these children's claims go out is that when the child recovers, the families want to spend time together. It gives people that real wake-up call, I suppose, of what's important. People want to spend time together, they want to go on holiday. So it gives them options, and that's what these things do, these kind of payouts do. It's also worth remembering with this as well that if the parent has decreasing cover, the cover that the child would get, the child payout, would be based on the adult's original sum assured. So even if it's gone below that £40,000 because it's been decreasing, if that's what they had prior, they would get that full 40,000 regardless of how much was kind of left in the parent's pot for KIT claims. The other thing that's worth probably mentioning here as well is one of the changes that we made last year was that we removed the need for the child to be in full-time education. So we will cover children up to the age of 23, and it doesn't matter whether they're in education or not. We just wanted to take out that nuance because it, again, makes it simpler. There's a lot of children now that young adults that don't go to university, they just go straight into work, and that we're seeing that more and more now. So we just wanted to take out that kind of unsure, where people were unsure whether the children were going to be covered or not. So they are up to age 23. So another enhancement that we made was around increasing cover. So a lot of you will know this as indexation. And so this has been traditionally used on income protection policies, but it can be used across any kind of product. But as I say, traditionally it was used for income protection to make sure that the benefit stayed in line with that person's wages going up and also with inflation. Now, our stance on it before we made this change was that if somebody removed that once, then it would be gone from their options going forward, and they would go to a standard policy. So that was quite strict, and it wasn't keeping in line with keeping up with changes. So we've changed that. So customers can now decline increases up to 3 consecutive years before the benefit is removed. And that gives the client a lot more flexibility. And as I say, this does reflect real life. Sometimes, money is tight. You might not have had a pay increase that year. Priorities change. You might just not want an increase that year. So what this means is that they don't lose that feature immediately. So as long as they accept an increase before declining 3 years in a row, the cover, the option will stay in place. And as we know, inflation rates have fluctuated massively over the past 5-10 years. So what this means is that it can manage that, and you can help that client through those times and have regular reviews, and the increase in cover remains a safeguard, but as and when they need it with more flexibility. So as I said before, we are wanting to stay in line with life changes, and this is one of the changes that we made that does ensure that the long-term cover that you put in place remains appropriate over that period of the term, rather than punishing people for one difficult year that they might want to take the indexation off. So the another change that we made, and the fourth enhancement that I wanted to share with you, remind you of, is the quote validity period. So we extended the quote validity period from 90 days to 120 days, which, as most of you will be mortgage and protection advisors, this is a really great improvement especially for you in your industry at the moment, because we know that mortgages are taking a lot longer to go through. The timelines have changed massively over the last, it's probably 3 years, isn't it now? They've just been going up and up, and it doesn't seem to be changing. Cases are delayed by all sorts of things, as we know: solicitors, lenders, underwriting evidence taking its time to come back, valuations, all these things, chains. And we've done analysis on it, and you'll probably think it's longer than this, but the analysis shows that the average mortgage completion is around 100 days, but a lot of them do take longer, as we know. But that meant that the 90-day validity period wasn't really working. So we've extended that to 120 days, and that provides you with less friction. So these quotes will remain in place for you to, work on the mortgage with the client. So giving you greater certainty for longer, and that means that more cases can complete on the original terms. The premium won't change even if the client goes through a birthday. The only reason it will change is if you did a requote. So as I say, this is a really positive change, less admin, less stress, smoother journey. And one of the things I wanted to also touch on when we're talking about the quote validity period is the declaration of health, because this kind of fits in quite nicely as well. We have a really simple process for you to be able to declare your do a declaration of health for your clients. And again, that will give you more certainty of cover. So you can do this online, you can do it on their behalf. And once the declaration of health is completed, it can keep the health information valid up to 12 months. So it needs to be refreshed every 6 months. If you have got a high value case, the validity period is slightly shorter. It's half the time, it's 3 months. So if the kick is 350,000 or the life is 500,000 or more, it will be shortened to 3 months. It's always 6 months for income protection, but we make it really, really easy for you to do it. You will receive a reminder in OLPC 7 days before this is due, so nothing should be missed. If there's any changes to the client's health, you just tell us, and then we'll let you know whether there's going to be an impact on the terms. So this is another way to make that experience for the client smoother and reduce friction, which can sometimes cause clients not to go ahead. So the more seamless it is, the more likely the client is to go ahead, and the more likely they are to keep the business in place as well. So the fifth improvement that I wanted to talk to you about is something called the income 10% buffer. This change was made off the back of some extensive research that we did around claims on income protection. We did this because we wanted to improve client experience on claims. And one of the things that we found when we did that research is that clients most of the time had a good experience, a good claim experience. If ever there was a dissatisfaction, a lot of the time it was around to the expectations not being met. And it could be down to the expectations not being met on the amount of cover that they received. When people take out income protection, they obviously take it out based on the income at the application stage. But by the time that they claim, circumstances may have changed. We've just been through the indexation changes, and perhaps their income was reduced as well. The working patterns might have changed. Bonus is altered. All these things can make a difference to what somebody's earning at the point when they come to claim. And what that can mean is that the benefit is reduced because we do financial underwriting at the point of claim. That said, in the research that we did, we found that on average, if somebody's income had reduced, it was never more than around 7%. So it was always, not always, it was on average less than 10%. So what we decided to do is we decided to make the decision that if it was 10% or less, we would just pay out what they'd been paying for. And what that does, it creates a more customer-friendly outcome, and it improves the experience of our clients. So it means that we've already been able to pay out a number of claims in full that otherwise would have been reduced. Just to kind of remind you, though, that this doesn't change our income guarantee. So if a customer goes below the threshold of 1,500, we would pay up to 1,500. NHS workers, and that is 3,000 as well. So that enhancement, this new enhancement, sits alongside that already strong proposition for your clients. But this is a really positive step to help clients have that positive experience when they come to claim. We also looked at our literature. In line with Consumer Duty, we have to help clients understand the cover that they have in place. And the research consistently showed that income protection was one of the least understood protection products. And it's not surprising, really, because it can be more technical. The definitions do matter, deferred periods matter, the claims process can be different to what people expect. So we've simplified the documents that go out. We've improved the layout, the navigation. We've used plainer English. There's no jargon in there. Shortened sentences, because we know people everybody now has a shorter attention span in this current world. So this really supports that consumer duty around consumer understanding. We're also, we have also introduced annual reminders on income protection, encouraging customers to review it and go back to you as their advisor to look at whether their policy still fits their needs. So you should see that coming through. Trusts are another really important part of our proposition. We believe strongly that policies should be considered for trusts when appropriate, and that the client should be informed as to their options and how trusts work and the impact of not having a trust in place. They can, they can help avoid probate. They make sure that everybody gets the right money at the right time. They support inheritance tax planning, which we know is going to be massively important for much more of us going forward. And that's why we've made trusts really, really easy for you to put in place. There's no signatures required, no witness required. It's a quick setup. It's flexible. You can have a look at different types of trusts for your clients. And if this is something where you want more training or more support and to understand how you can do this on OLPC, please get in touch with your BDM, because they would be more than happy to go through this with you. I can share with Tim your local BDM details. So if you want to go through this in more detail, it's a really, really important part of the whole setup of protection, so that the client can, the client's family can actually claim when it comes to it, and if it comes to it. And whilst talking about claims and the importance of being able to access the benefit, I just wanted to mention that we have no claims cut off. This, again, maybe something that you're already aware of. This is not something new. It's just something that not everybody knows about. And essentially what it means is that there is no cut-off when it comes to claims. So if the client has a critical illness and for whatever reason they don't put in a claim, it could be because they forgot about the cover. We know that happens. It could be that they're just too poorly, it's slipped their mind. So if it's gone 6 months, a year, even if the policy has actually ended, if it was in place and when they would have been eligible, they can claim even if it was 5 years later. We've got countless stories of clients that have claimed years later through advisors, because they've been doing a mortgage review and had a conversation around what's been going on, how are you, and this has come up and they said, we put a policy in place for you, let me go back and check that, and we've been able to pay out. So we've been able to pay out many claims because we don't have this claims cut off. So if this ever comes up with your client, please do let them know that if the policies with L&G, they can still claim even if it's months, years down the line. Right, so finally, I wanted to mention our brand new electronic pre-sales underwriting tool. You'll hear it referred to going forward probably as ESPU tool. So this is a really valuable addition for you. As mentioned before, not all of the providers are on the third-party tools. We are not on the third-party tools because of the way that we underwrite. But what we wanted to do is we wanted to make it as easy as possible for you to access an underwriting decision from us before submitting the formal application. It can be, incredibly useful, especially when you're having these early conversations with clients. And we know one of the biggest barriers to protection is that uncertainty and not knowing and not being able to manage expectations. So we've got this new tool. It sits within OLPC. So this is where you can access it. You just scroll to the bottom of the front page on OLPC, and in the useful tools and help section, there's a new section called pre-sales underwriting tool. You just click on it, it'll open a new window, and that's where you can begin the pre-sales. You can do this 24/7. You can do it when you see the client, and once you've got a decision, it's valid for 30 days. Now, I just wanted to quickly run through what you'll see on the screen. So it'll ask you for some basic information. So the client's gender, their age, reason for cover, how much cover it is that you're looking for. You will then go through to the basic details. So it'll ask you questions about whether they're a smoker. If you do select yes regularly, you'll be asked how many cigarettes they smoke on average per day, and it will give you a drop down where you can input that, and then you can just click continue and then go through. You can also add in as many disclosures as you need to. So if the client's got a high BMI plus a health condition or plus 2 health conditions, you can do that. So it's not just limited to one condition, which is key with this kind of tool, because we know that a lot of the time people don't just have one condition. So this is an example of the questions that you'll be asked on disclosures. So around occupation, around height and weight, it'll give you the options of putting that in stones or kilos. And similarly with height, you can put that in centimeters or in feet. It'll then give you this decision screen. So the decision screen shows you an indication of each of the products. So you've got life, kick, as you can see here, TPD, waiver of premium. And what you need to do is when you've got this decision, just make a note of that decision reference number, because if you do want to go back to it, you can input that at a later date. And you can also download a copy of the indication by clicking the PDF icon. So this is an example of what you would see if the disclosures give you a rating. So you can see here, it will break it down for you. So waiver of premium and kick have been declined. TPD has been accepted. You've got a loading on IPB, and life has a loading as well, and it's been accepted. So you can have that conversation with the client to let them know, what to expect on their protection needs. If you do need to amend it, you can select the back button and you can amend it that way. You can also create a new request by selecting new to restart the journey. And you can also just come out of the tool using the back button. If you want to go back to something that you've already created, then you can just go to the pre-sales indications at the top, put in that reference number that I mentioned that you need to keep hold of, and then you'll be able to retrieve it. So it's that simple, the ESPU tool. So just to kind of wrap up on what it actually does, it can identify medical requirements, ratings. It's available 24/7. So you can check your cases, whenever suits you. It can be when you're with the client, when you go home or to your office. But the big benefit with this is it's going to save you time. There's going to be fewer surprises, fewer delays, and it's just going to be smoother for you to go through that underwriting journey with the clients and empower them to make better decisions and you to make better decisions on their behalf. So if you're not already using this, have a look, have a play around with it. If you need any support, need any help, your BDM will be able to help you. So do get in touch with them. They've been more than happy to help. So I know we've been through a lot. So if you've got any questions on any of the things, the kick extra, increasing cover, the validity of the quotes, let Tim know and I'll be happy to answer them.
Perfect. Thanks very much, Janine. Really, really good session. Covered quite a lot of ground in there, but really, really good. And it's always pleasing to see sort of providers adapting and being conscious and mindful that lives of course do change. We're constantly sort of evolving and moving, so some really good bits and pieces on that. I really like the additional payments on the critical illness extra, that sort of financial reassurance piece, that breathing space you mentioned, massively welcome. I know that there'll be clients that obviously do benefit from that. The last thing you want is obviously financial pressures when you're dealing with complex medical conditions, critical illnesses that are very much live. So really good. I do also, I wasn't aware personally myself, you providing cover on the original amount. So that was a nice little learn, certainly from myself. So do appreciate that. And as you mentioned, yeah, certainly on hand. It's great to hear again that there is this focus on trusts. Obviously, there's been quite a lot of change within sort of inheritance tax planning and what may or may not be happening with regards to government. So I'm glad you're making this really, really easy. It sounds like, and you'll probably confirm that there are lots of useful support and tools on your website as well. So do have a look at those. Let's signpost to those. But of course, if you do need any help with upskilling, by all means, do reach out to myself, Janine, or the BDM team, and we can, of course, put you in touch if you're interested in pursuing that a little bit more. So thanks very much. Tony Silver. I will just pick up one quick question. Tony Silver's asked the question. He's actually asked two. I might need you to just dig a little bit deeper on your first question, Tony, if it's all right. But let's pick up on the second one, which is how easy is it to put a policy into trust pre going on to risk if it wasn't selected at application? Is that something you can answer now, Janine?
Yeah, I can answer that. It's not as easy. It still does require a signature. So I would strongly suggest doing it at application stage because it does take a lot more time and effort if you wait. And it's so easy to do it at application stage. As I mentioned, they just need to kind of know who the trustees will be. You don't need to get their permission. So it's not, it is very, very easy. But that's a question I get asked a lot. Every time I do this session, I do get asked that question around trusts. So it's something I'm going to take away to see if it is something we can work on, because it sounds like that can be something you go back to maybe as advisors more often than we potentially are aware of. But I would strongly recommend doing it straight away because it's the easiest way to do it.
Look, thanks very much for that. Tony, just going back to that original question, can you just put a little bit more detail, just a little bit more specifics, and we can certainly pick that up. Again, just trying to stick to time. I'm now going to look to move forward with things. So let me retake back over the reins and share my screen. Yeah, I'm going to be passing over to Roy and his aptly named Compliance Corner. I'll be moving your slides forward, Roy. So please do just give me a bit of a nudge when you want me to go sort of next.
Yeah, I'm pretty comfortable. You can move to the next one there.
And we'll pick up the Q&A at the end. So brilliant. Thanks very much. Let's carry on going.
Perfect. You'll probably all be glad to hear I don't intend on taking the full half an hour. I think, the reality is we can be somewhat saturated with compliance to the point where it just sort of becomes white noise. So I thought rather than having sort of a preconceived notion or idea, if you like, in terms of what you guys want to hear, I thought I would talk a little bit around what the regulator is saying to us at the minute. As you would have seen on the previous slide, my job title is sort of Specialist Area Supervision Manager. One of the few people within the sort of LSL family, if you like, that sits in both the DA space with TMA, but also in the network space as well. The good news is that allows me to sort of see it from both sides, I guess. I see the way that sort of new regulation is interpreted and then implemented in sort of the stringent network example, or in the network environment, sorry. And then can obviously pass that on to you guys within the DA space as well. Obviously, we're never going to sort of dictate, but obviously we can use some of those sort of practices that are coming through and that we're implementing in the network side to obviously share that knowledge, if you like, and sort of really bring the piece together. Moving forward, again, just as a point of reference, I guess, I'm actually moving roles over the next month, so into a more governance-based position. The reason I'm saying this is because I will actually be taking ownership of things like recommendation templates. So that actually is not just going to be prevalent for the network space, but actually for you guys in TMA as well. So the reason I'm bringing that up is I'm more than happy to have feedback in terms of what works well and what doesn't, because let's be honest, I think the reality is with documentation and the way it's sort of evolved is probably the diplomatic way of wording it over certainly the last sort of 10 to 15 years. I think if we're being very honest with ourselves, we've lost sight of who that document's for. We're writing it to sort of pacify compliance or sort of cover our own backs, rather than really being aware of there's a customer at the end reading this. So I think we need to get a bit of that balance back. So obviously, like I say, that's where a lot of my time is going to be spent in the initial months when I go into this new role. Anyway, yeah, you can click now for me, Tim. So yeah, like I say, thought I'd do a brief run through of what we're sort of hearing in the wider space at the minute in terms of what the regulator's telling us. It's led to work, like I say, already in the network space. So just want to share some of this info with you guys. I think everyone's aware that the emphasis has now shifted towards outcomes rather than just following rules. And you may see, dependent on the contrast of your screen, I'm grinning, because it's given us that certain level of autonomy that we've all cried out for until something goes wrong, and then we feel like we're really left holding the baby. So it's sort of like, be careful what you wish for. We know that the regulator is really good at giving us a framework, and I should do air quotes around that, but they never really give us the guidance on how they want it to be sort of delivered. So it's always down to that sort of interpretation, that grey area. So yeah, like I say, the good news is that we should be in a position now where actually, if we're driven by the outcome, and it's almost like reversing the journey now. So it's, has the client got the right product? Have they got there in the right way? If the answer is yes, the rest of it to a point almost becomes philosophical. Whereas previously we were very much going through a point by point sort of journey to get there. And if you got one of the points wrong, regardless of the outcome, you were still in the wrong. And it just felt a little bit out of line. So fingers crossed, like I say, I'm saying it with ultimate pragmatism. But obviously I'm only one voice. But the reality is that's the shift that we're trying to make. And it's certainly the shift in mentality as well that we're trying to make across the network and the DA space as well, in terms of the way that we work with you guys. So firstly, I'm just going to look at the mortgage space. So again, I've tried to keep the sort of points, I suppose, as they sit on the paper, quite brief, because like I say, I don't want to saturate it too much. But the big one at the minute is still around advice quality and suitability. The good news is the regulator has told us what they're scrutinising at the minute, and you may think this is a bit of a broken record, but the points that they've come back with are they're concerned with our customers being placed into the right product for their circumstances, and they actually wrote the in their circumstances in bold, so it sort of gave us a bit of a steer in terms of where their concerns may lie. That the advisors, or you guys, if you like, and firms, I suppose, for a wider position, are properly, and that was the bit that was written in bold, considering affordability, things like stress rates, terms, and future risks. And then the ongoing point, I suppose, which was the third one, was, is there an over-reliance still on product transfers versus remortgaging? Now, I know it's sort of a case of poacher becomes gamekeeper. I spent a lot of my time on the advising side of the desk rather than the compliance side. And I absolutely get the conversations that happen with clients. I think rather than sort of seeing this as a challenge, it's more about challenging how we're documenting it. And that's certainly how I'm seeing it. A new term that's sort of come out and been coined and been brought up in conversation that we've had directly with the regulator is this term that I hadn't heard until recently, which was called execution drift. I suppose from my side, that's advice that could look compliant on paper, but I suppose when you take a step back from it, does it genuinely optimize client outcomes? I suppose another way of phrasing it really is order taking, and we're all used to that term. We've all heard it. And the way that the regulators sort of position the order taking is, are we simply agreeing, I suppose, with customers' preconceived ideas or notions, or are we actually making a real recommendation? So, for an example, I suppose often the reason why the client wants a longer term mortgage is they want to keep the payments low. But the reality is they could actually afford a shortened mortgage. Now, I think the reality is, us on the coalface, people dealing with people, we understand that there is actually a difference between a perceived budget in terms of what I could afford versus what I want to afford. But I suppose sometimes it's that narrative between A and B that we don't fill in the gap very well on. If we're presenting a case that's saying, here we go, there's a mortgage for £900 a month, Mr. Customer, you're going to be paying it for 30 years, but they've got £2,000 of disposable income, there's probably, there's every right for someone to raise issue with that. in terms of what conversation is had. I mean, the reality is they probably want to be able to go to Costa. They want to be able to go on holidays. They want to be able to do things with the family and not be a slave to the mortgage. That's absolutely fine. That's a preference. But have we documented it? So I suppose that's just being incredibly objective around that sort of execution drift and the way that the regulator's seeing it. I guess with a lot of sort of proprietary CRM systems, it can be quite binary on its journey. So it's sort of what's the budget? What do we want to spend? Have I done it? But when we're showing that big disposable gap, it's just, can we add a little bit of soft note in there? Can we add a bit of context in terms of what we're doing? It just takes us from a position of being a little bit hazy to being waterproof. Because let's face it, the world that we live in these days, it's probably not going to be the client that comes back and challenges that. It's going to be a third party company, a claims management company, something like that, that's going to be processing a complaint. And the problem is then it becomes very binary. It becomes very black and white. And I think the reality is at that stage, we're on to a bit of a losing battle if we don't have those supporting notes. Like I say, that sort of bring it all encompassing really on that first point. Moving on, treatment of customers in financial difficulty. I put that one on there. We've talked about vulnerabilities, and we could sort of roll it into one really on this one, I guess. But I suppose particularly prevalent for the space that you guys are in, which is, are we identifying those borrowers that may be struggling? Are we offering appropriate sort of forbearance options? So it's not just about how we're supporting in those meetings, but are we looking at things like term extensions or switches, other types of products that might be available, rather than just sort of going down that standard mortgage journey? But I suppose the big point that the regulators picked up, particularly on the treatment of customers in financial difficulties, is around, are the outcomes consistent? So that something that they're looking at the minute is that variability between advisors, lenders, and firms. I think something that was brought up at the back end of last year, and it hasn't been brought up again since, ironically. But particularly when we're looking at cases that are debt consolidation, to go back to that one, for instance, is there is a core for understanding the difference between someone that's in genuine financial distress or someone that's having a poor lifestyle facilitated, or someone that's in that sort of perpetual cycle of repeat borrowing. Are we really noticing the difference? And I get it. There could be the argument that, well, you know what, it's the client's money. All of their sort of wealth, if you like, is stuck in the bricks and mortars. That doesn't excuse our sort of responsibility, if you like, to at least identify and have those conversations. I'm not going to say an intervention because that's borderline patronising to the client. However, we need to be putting ourselves in safer positions in terms of what we're doing with that moving forward. The FCA has been very clear as well, particularly with the financial difficulty element, that if there's poor handling in that position, it will be classed as consumer duty breach. Now, the problem is here, like I alluded to right at the start, was when you're not really given the framework of what financial difficulty actually is, to then have a sort of a challenge on the back end of it, it's a bit of a challenge, let's say, that we're juggling with them, but we are having narrative in that space. And fingers crossed, pulling back to my other point around the ownership of documents, templates, etc., is that we should be able to support you as TMA in terms of providing you with the right documentation and templates, which should at least close some of the gaps or close some of those grey areas down, just to better protect you and ultimately the customer as well. Vulnerable customers, similar theme, something that we've been talking about for a while now. It's not new. Obviously, it's linked into sort of that consumer duty wider piece, I guess. But again, it's how are we identifying those vulnerabilities, I guess? How are we adapting our processes? But more importantly now, I suppose, it's what are we doing in terms of monitoring those outcomes? So I know that when I speak to firms and go out and do visits, it's all around, I get that you can record it, but then what are we doing? Are we having a holistic review of that? Are we pulling it back annually? Are we pulling it back every month? Are we pulling it back 6 monthly? What are we doing? What changes are we implementing as a business to support our clients? And again, just so that you're aware on the vulnerable clients piece, I guess it's one of the easiest areas at the minute for the FCA to challenge. So when they're looking at sort of holistic file reviews, it's quite easy for them to make assumptions, let's say, in terms of pulling them out. There was a fourth point on there, which I haven't pulled out, which is around sort of commission bias and conflict of interest. But again, that's nothing really new. The FCA is looking and watching, let's say, bias towards lenders or products with higher procreation fees. But more so, it's the lack of transparency in the remuneration, disclosures. But again, it should be pretty standard fare that that's within our templates, not our templates, sorry. It's within the ESIS documents, particularly on the mortgage side, that come from the providers, and it's certainly on the protection documents anyway. That's standard fare. So yeah, we're not hiding it from anyone, and I would like to think it's never going to make its way into a sort of a recommendation letter as well, because it's a duplication of information anyway, and it might really turn clients off by seeing that. Moving down into the protection space, so apologies if you see me looking up at the wall, it's because I've got you guys up on a screen in the distance here. The big one, I suppose, just to give you guys a bit of an update, you'll all be aware that we were sort of expecting the initial results from that at the back end of last year. It got pushed back a few times, so we keep getting sort of interim reports or interim sort of bits of sort of prose, if you like, in terms of where we are. I think it's clear to see that the FCA's flagged concerns around the belief that the competition isn't working well at the minute, and that premiums, as a sort of a wider view, are potentially higher than they should be. And I suppose that's when, particularly when you're looking at sort of those higher net worth or those high life value policies, if you like, that could be paying multiple £1,000s. The net worth position on that, just to give you a bit of background, is anything above 7.5 grand we start getting a bit twitchy with. But the reality is, like I say, it's one that I think, again, the regulator's probably working with the providers in that space in terms of, is this actually representative of fair value in terms of the wider piece of work? Obviously, the concern with that as well is that sort of I suppose, particularly around the commission side of things, is that the intermediaries could be influencing or distorting incomes in terms of the way that looks, or the way that it's perceived, the way that it's reported. So again, that's probably why it's taken a little bit longer, if you like, to get that sort of quantitative data to be able to really move the space forward. The commission structures, like I say, I've made a quick note on this one. I'm gonna whistle past these, because what I've done on the last slide, just so that you guys are aware, is just put in a few hints and tips in terms of hopefully how we can mitigate and control some of these risks. So commission structures, like I say, it's probably the single biggest risk within the market at the minute. So the concerns are obviously the high upfront commissions driving potentially poor choices. And I mean that more so from the advisor standpoint, not from the actual advisor. Premium loadings to fund commissions is again a major concern. Lack of transparency in terms of the way that those payment structures are working as well. And I think the problem is the potential parallels that have happened with things like motor finance over the years, if you like, in terms of different products that are out there as well, that potentially feel similar to things like PPI and MPPI as well. So again, it's just sort of once bitten, twice shy. So I think we just need to front into it and be aware of it. Just in terms of the suitability and I suppose the product matching element, the FCA, or the regulator, sorry, is really challenging whether customers are overinsured. And I suppose that's more prevalent or easy to see in the space of unnecessary add-ons. Again, not teaching anyone to suck eggs, don't bolt the same add-on onto this, multiple products. It's very easy to establish that actually there's been some customer harm there in terms of paying for something that they effectively can't use multiple times, or, again, dependent on the criteria. The big one, and it's something that we've been banging a drum for, I suppose, for ages, is that policies are aligned to actual needs and budgets. There's always going to be a level of subjectivity to this one. And again, dependent on the conversations you have with your client, I know because I've had them as well, where a client will come in and say, I just want to have a lump sum of X. It's my peace of mind. It's there for my family. The challenge is why? What are you covering? What are you covering that, that does that need exist? Are we putting your family in a better position if you die than you would be if you actually survived? It's all these sort of questions that we just need to be really getting to the bottom of and understanding. And again, it links into the last point, I suppose, on the side of the suitability of the product matching. It's just actually really revisiting things like reviewable and guaranteed premiums. I think that one's been highlighted because of the way that Vitality sit within the market. As we know, I don't want to call it the red herring. It will always sit at the top of sort of sourcing results. But then it will have things like optimizers added into it, which will obviously caveat a list of things that need to be done, like going to the dentist 24 times a month or whatever it might be to order to keep accessing that product. I'm sort of making a joke about it, but there's a reality that it's sort of making the water a little bit murky in the space that we're operating in. So I think that the reason that the reviewable versus guaranteed was put in there was probably due to products of that nature. Let's be honest. Um, Sorry. Just in terms of persistency and churn, you know what? It's going to be on the agenda for all providers. It's going to be on the agenda for networks, for mortgage clubs. It's going to be everyone's going to really care about it. And I think the reality is you guys do as well. You know, it's a false economy to keep turning products over for that initial upfront sort of commission hit, if you like, when a lot of it's getting clawed back anyway to actually offset the one that you've just rewritten. I think, interestingly, I mean, again, as a side note, I deal with something called DQM, which is all of the sort of the quarterly, monthly meetings that we have with the providers on a network level to discuss all of the KPIs across all of our firms in terms of where business is going. Is it good quality? Is it sticking? What's the underwriting outcomes, etc., etc. Something that's come onto the agenda more and more now is what's happening in the fifth year and beyond. So for me, and I made a joke about this, which wasn't too well received in a couple of the meetings, was it's free game when you get to that fifth year, because actually you're out of that clawback window at that point. Why wouldn't you revisit it? I probably should have framed it as the client, if they haven't had one already, probably needs a a proper review here of what their proposition looks like. Is it still fit for purpose? Is it meeting the needs? Is there something that we can do to better serve them? Obviously, that's what I meant, and that's what my sentiment was. But the reality is, again, it's the poor practice as an industry, if you like, that's now coming into view probably more than it has been previously. So again, it's just one to be aware of. And then again, just as the last point, claims outcomes and product value. So again, I suppose the regulator has laid out quite clearly that it expects firms to understand or at least have a reference point of what the acceptance rates are on claims. So you're not just offering products out there without understanding if it's a credible product, that if you know what I mean, that's going to come out the back end. Anything that may provide friction or barriers within the claim journey. So again, having the sort of the sessions with people like Janine from L&G puts us in a really good position to actually understand what that sort of end-to-end journey looks like, and actually what that means to the client. And then thirdly, but probably more important than everything, which is, do the products actually deliver real world value to the end users? So moving on to the next slide, and I'll whistle through the point. So again, I put some tips from us, I guess, or some that says some tints. So I think that's
Hints, yeah.
that's in between tips and hints.
Tints or hints, yeah.
So it's a bit of an amalgamation of two words there. So I won't take credit for that one, as I didn't do the slides, but I did do the content. So yeah, apologies on that one. So I suppose these are just some key points. Just how can we protect ourselves? Yeah, there we go. There's an admission of guilt there with the camera coming on. But the good news is, with a lot of these points here, like I said, these are things that I'm trying to integrate into the templated documents. So whilst they need to be sort of principles and things we need to think about, hopefully the prompts in terms of the recommendation letters, they'll be there by proxy, if you know what I mean. So it should help. But I think the reality is we just need to have an honest conversation with ourselves when we're doing cases, in terms of, are we really living and breathing it on every case, in terms of, are we really giving clear, honest accounts of the conversations we have? Because the reality is, I know the conversations we have are really good. Often, we're really poor, and I mean this as an industry, not about you guys individually. We're quite poor at documenting. I don't want to call it the chit chat, but the soft facts. And quite often that is where we really discover what the real needs are. And then when you look at a case file as it's presented, it's often very different. It's, like I say, it's very granular. It's very matter of fact. It's very black and white. But actually, quite often it doesn't give us sort of the bone on the meat, as someone once said to me, and I always do it the wrong way around now on that basis. But it doesn't give us the context, if you like, of how a decision was reached. I'm not going to read through those points because again, it's borderline patronizing to read through them, but they're very simple. And again, like I say, the reality is, with those points, what I'm going to do is I'm going to integrate them into, if they're not already, into the recommendation letter templates that are going to be available on the current guys ones are already available on the Vault anyway, so that you guys can access it. But like I say, these will be evolving documents over time. I take ownership of it on the 1st of June. If I can turn a 10-page document into a one-page document, I will do, providing it gives us the right information. The reality is that is for the client, it's not to satisfy us. So let's make it a really powerful document that actually adds a real piece of value. I thought, just as a final sort of closing thought, there's two big takeaways at the minute that we're working on currently, I suppose, as a wider LSL group team. And hopefully it ties together the last few minutes of me talking to you guys. We talk a lot about sort of management information or data, um, and what we do with it ultimately. And I think moving forward, a lot of it's going to be around, can we actually produce this data based on outcomes rather than just sales? So we're very good at the minute in terms of saying, well, how many people have we had go into our sales flow? How many people have we had come out the other end? Now it needs to be more, and again, this is going to be an evolution over time, but it's just something to think about. It's more around outcomes. So people in certain situations, areas, can we group them? Can we look at them? Can we see trends? Can we then build better strategies that are more effective moving forward? Again, that's quite a piece of work because it's the bits that don't fall into that sort of granular, like I say, that, well, not granular, into that sort of binary black and white box. The second one, and like I say, it's hopefully been the theme throughout, is the increased need for the clear audit trails, and that's around the advice rationale. The reason I say that is we're incredibly good at packaging cases, and we're really good at providing requisite documents, I suppose, for the lenders. So payslips, SA 302s, whatever it might be, we will provide exactly what they want. But have we really, and this is that honest conversation with ourselves, have we truly documented the reason why we've done things, so that the cases don't leave us exposed effectively? One of the big areas that we're having pressure on in the network, just as a closing point, and again, just to add a bit of sort of real-time context to it, is around fixed rate periods. It's not really enough these days to say I've gone for a 2-year deal because you wanted a fixed payment. That doesn't tell me why. It's factual, but it doesn't tell me why. That doesn't differentiate if someone wants a fixed payment, and that's the reason you put the challenge back could be, well, there's also products available on 3 years, 5 years, 7 years, lifetime. So what differentiates the need for that product that you've just said? In the same way, like I say, when you're going for a lender, try and avoid ambiguous language. Let's not be afraid to call a spade a spade. Rather than saying the reason I've gone to this provider is due to criteria, it might make sense at the time, and then the client might go, yeah, actually, that does make sense. But actually, as a standalone document, if you read that or I read it, what does that mean? It means absolutely nothing. Let's not be afraid to call a spade a spade. If it's because of previous credit, just say it. I think the reality is we need to be in a space now where we're not afraid to say exactly what we're thinking and exactly, recording the conversations. I don't want to call them verbatim, but exactly how they've transpired. Because the reality is that should improve things like customer understanding. And then on the basis of the consumer duty side of things, that puts us in a way stronger position moving forward. But like I say, that's something that I'm working on in terms of supporting you guys with things like documentation. But wanted to just share a flavour of, I suppose, where we are, the challenges that we're getting at network level directly from the regulator, and obviously then what we're going to try and do to support you guys moving forward. All right.
Sorry, there was one more.
Oh, well, to be fair, it's ironic that it said confirmed customer understanding, wasn't it?
Brilliant. Cool. Look, thanks very much, Roy. That was really, really good. We're going to have to sort of have words after. Is it bone on the meat or is it meat on the bone? Come on. I mean,
Wow,
really.
absolutely. Absolutely.
Brilliant. But no, the point sort of very much on the devil's in the detail. It's just digging out a little bit deeper. Stuff that rings true at the moment when you read back in years to come, months to come, is just, putting that extra layer of detail on the extra rationale reason why it's going to prevent any sorts of problems come back, isn't it? So I think we just need to just provide that extra little bit. Congratulations.
I was going to say, sorry, what I'd say as a closing point on that is all of the specialist area supervision managers, which, like I say, until the end of the month does include me, but Roger, Alison, Paul, and myself as it stands, I'm really happy to work through things like best practice in terms of when we're doing our sort of annual reviews with you guys. So yeah, if you want to sort of sidestep away from the standard review and actually work more closely on are our documents fit for purpose in terms of where we need to be and what we need to cover, we're more than happy to run through those in the sessions. So yeah, throw those questions at us.
Perfect. And that
All
is
right,
a
I'll
good
let you go
little
back, Tim.
That is a good little plug for some of our services. If you are not a TMA compliance user and you do want access to the vaults, do want access to compliance services, by all means, do reach out to myself or one of the team. We'll happily sort of be able to give you a little bit more information on that front. Roy, congratulations, good luck in the new role. Governance, yeah, sounds really, really interesting. Anything that you can do to make our brokers' lives that little bit easier, providing those clarity on those templates will obviously be very much well received as well. So look, really, really appreciate that. And yeah, you made some really, really great points as well to do with sort of persistency and churn, because that has been something on the agenda for everyone for a long time now. And yeah, I get the point about the 5th year period and beyond. Very, very vital that clients do need sort of reviews to pick up on what they're doing, and if it's still obviously fit for purpose. 5 years, a lot can happen in that sort of period. So, yes, some really, really good points and information there. Okay, I'm going to stop sharing and we're going to open it up to questions now. So let me just multitask and do a few things at once, which I'm never great at. I see John has replied back to Tony, which is perfect. Thanks very much. Yvette has asked a question. Is there a general expectation or guideline around what percentage of a client's disposable income should be allocated to protection? What's your sort of thoughts on that, if you wouldn't mind, Roy, or any one of our panelists? John and Janine, feel free to unmute yourself and come in as well if you want to.
I can give
Roy?
a short answer of no from our
Yeah,
side. Yeah.
didn't think there would be.
I
Yeah.
think was there a secondary question around disposable income, or was that the only one? Because I saw the
It,
first line of disposable income and I thought it was a different question.
no, it's a general expectation or guideline around what percentage of a client's disposable income should be allocated to protection. I don't
Yeah,
suppose
no, there's no
there
expert.
is there?
Ultimately, it's led by the client, isn't it? Some people are going to be really risk averse. Some people are going to be really happy to have the conversation. It's just, again, just documenting the conversation, isn't it, in terms of how that budget's been agreed or how we've reached it. I actually thought the conversation was going to say, is there a general expectation of how much of the budget we should be utilising for the mortgage payment? But again, the answer is no. There's no answer, and I don't think there would ever be, and I don't think they could ever give that as a guidance point. I
No.
think the challenge will always be when there's budget that's not used. Why is it not used? And like I say, the reality is, you could argue that there's concerns that a loaf of bread might be 10 quid tomorrow or next week. So the client wants to have that, that flexibility in there rather than spending every pound and pence. But yeah, there's no expectations is the short and long of it.
Mm.
I said that the wrong way round as well, just for your benefit.
A wee bit of wiggle room left in people's budgets. Yeah,
Absolutely.
alas, who knows how much a flat white is going to cost in the coming weeks, etc. Certainly, we're feeling it at the pump still. So at the minute. So thanks very much. Question from Tony. It looks like it is aimed more towards sort of John. How much does the protection platform cost, please, John? How do brokers get access to Underwrite Me?
Very good question, Tony. Some very, very good news. Don't listen to everything you hear. The system is completely free. There's no charge. The commission that you would get paid if you put an application through the platform will be exactly the same as going direct to the insurer as well. So the system is completely free for advisors to use, and there's no charge. It will be exactly the same. What we do is we get your agency details with all the insurers that we work with, and that's linked obviously to your premium amounts and commission amounts. So everything's correct. If you want to sign up, if you just go to the protectionplatform.co.uk, you can register for free, sign up for the platform there, just pick the insurers that you got access to, and then we will get your agency details from those insurers.
There you go. That's brilliant news. So we are just talking about sort of pennies in back pockets, and you don't really get much free of charge these days. So great to hear that. That's really, really good. There's one other question.
No,
You just answered it. Sorry. There we go. I was hoping someone else was just going to jump in or fire off any last minute questions. There's one from Billy that's just landed. Is there a charge for CRM integration with protection platform?
Good question, Billy. There isn't, no. So we are integrated with a couple of the industry CRMs, so the likes of IntelliFlow, OMS, 360, FinPlan. We're integrated with those CRMs, so you can get access to the integration there. And what obviously that does is there's pre-population from the CRM into the protection platform, and there tends to be a two-way integration back in. So the important documents like the Q&A document, the fully underwritten evidence, your questions and answers document is then pulled back once you put a policy on risk to the CRM, but there isn't a charge to integrate with CRM.
I don't think you mentioned Acre. Is Acre one that's specifically
Acre isn't at the moment, no, but we're talking to all the main players in the market, and Acre are one of those CRMs that we are talking to at the moment.
Any rough ETAs, timescales?
Yeah. I like the question.
How long's a piece of string?
A piece of string, yeah.
Perfect. Okay. Question from Tony. Is it free just to start? Is free just to start or for life? I'm assuming it's free for life, yeah?
Free is free, yeah.
Free is free, so no cost thereafter either. So it's free for as long as that piece of string is, Tony, which seems like it's indefinite at the minute. Are there any other questions? If not, I will look to draw things to a close. By all means, if you have got any questions, do reach out to myself afterwards. My details are, of course, on our broker website. If you're interested in taking out any products, services, offerings, or support from TMA, then please do, of course, reach out to me, and I can certainly sort of put you in touch with John, with Janine, with Roy, while he's still about, or one of our other wonderful compliance managers, and we can get that sort of all sorted out for you. A reminder that CPD CPD certificates, not templates. Well, I've got templates on the brain now. Will be sent out to you in the coming days. They'll be sent to the email address that you were registered for. And if you found today's session useful, handy, helpful, please do encourage other brokers in your firm to join future ones. We're always keen to get as many on as possible. Do just simply check back on the TMA website. It's tmaclub.com. And then simply just look at the events tab and you'll see a list of everything that we've got, whether that be face-to-face in-person events, webinars, and also videos of pre-recorded material too. But that's it. Thanks very much for coming along. Have a great day. I'll now hopefully see you next time. Thank you.